Let me ask you how optimistic you can be that a trade deal with the U.S. and China, if it is completed, as far as we know right now, how good that would be for global growth, which has been slowing. Would it be a boost? Would it get us back to a stronger level?
It's a positive, but I don't think it's the thing that's going to save the global economy. Because the trade dispute really has many aspects to it, one of which is sort of about soybeans and cars and tariffs. But I think that's the smallest piece in the bigger picture, because it's really about intellectual property, it's about enforcement mechanisms, it's really about a broader change in the Chinese system of law. And those are going to be much more difficult to have as part of this. And so they're going to be continuing disputes, continued concerns about enforcement, even if there are resolution with respect to soybeans and cars.
Good morning to you, Randy. So that's why we could see different estimates on the timescale around trade being relevant, I suppose. I see some people suggesting, look, we're going to get resolution, cool heads will prevail, we'll get resolution very soon, and others saying this will go on for years. It's because depending on how broadly you define this trade tension, I suppose. That's
exactly right, because I think there's a lot of pressure that the president feels, as well as the Chinese feel, to get some form of a deal. The easy thing to do is say buy more soybeans, reduce tariffs on autos, that kind of thing. And then that's also fairly easy to enforce. You can count the number of soybeans, you can count the number of cars. In terms of technology transfer, technology enforcement of property rights, that's a much vaguer kind of thing and something that is much more difficult to actually enforce and measure.
What's your assessment of how much these trade tensions are weighing on the growth story? Because global growth, yes, we've seen estimates come down, but it's still relatively strong, even if we progress through the cycle.
Exactly. So the numbers sound big and scary, but as long as the tariffs didn't go up dramatically, the impact so far has been relatively modest. There's been a lot of uncertainty about them, and that may have some impact on growth because people aren't investing. But the actual direct impact of the tariffs, particularly in the U.S., has been very, very small.
What is the effect, Randy, of renegotiating all of these pacts from NAFTA to U.S.-China to a U.S.-Europe trade agreement? What is the effect of that on global growth as it's slowing?
So on the margin, that's all helpful, but I don't think this was the key thing that was driving global growth down. There's been a downtick in investment, a downtick in consumption outside of the U.S. In 2017 was the year of synchronized growth. 2018 was a year where the world slowed down with the exception of the U.S., which grew a bit faster. But the U.S. isn't likely to grow as fast this year as it did last year.